When you know something important is happening, you want to be in there, to be part of it. At FT Live events, new ideas and valuable insights are shared by the world's leading minds. Online and in person, make sure you're there with them to shape the agenda and get the bigger picture. With the right people in the right place at the right time.
What's the price to ship your cargo? Assess fair market rates for every possible clean route with Vortex's Anywhere Freight pricing. Choose your vessel class, origin and destination ports to access pricing on demand for all 50,000 active routes and more. Compare multiple routes to evaluate trade profitability, using historical data to identify seasonal patterns and price trends. Instant, unlimited, Anywhere Freight pricing.
Wanted to connect. I just wanted to.
Kpler Insight cuts through the noise with expert market calls and actionable intelligence that traders and strategists trust. On January 10th, the US government expanded its sanctions to include a wide range of entities and assets tied to the Russian energy trade. Kpler's Insight team closely monitored this major shift in the oil and gas markets, delivering a series of detailed analyses and updates over the following weeks. Using Kpler's proprietary data and in-house expertise, the Insight team offers clients a unique, objective perspective on market changes and their influence on pricing trends. Kpler Insight, finding the signal in the noise.
So welcome back from lunch. I hope you had an opportunity to network. As you can see, I'm chairing this mega panel on AI. They say that we should have humans in the loop, and we have plenty of humans. I just feel like we might need a better and bigger loop to accommodate everyone. Just let me introduce the team. So Raphael Seeger from Vitol, Suleima Badi from Comgo, Nick Katsikpasis from Accenture, Scott Sherwood from Kpler, Daria Efanova from Sukden Financial, and Felipe Elling-Schurman from Sparta Commodities. So we've got full representation across trading, market intelligence, research, trade finance. We've got the full range here, and we're hoping to have a good 40-45 minutes to discuss the role of AI in commodity trading and what's changing. And we had a bit of a warm-up act from Seb Barrett yesterday, for those who were in the room, to him being interviewed by Malcolm Moore about what has changed in commodities trading. I'll just recap the half dozen or so areas that he covered there. He said AI is now ubiquitous and crucially accessible to non-techies as well as to the technology team. There's a proliferation of data sources for AI, feeding AI and machine learning. There's greater access to cheaper computing. There are multiple LLMs which have become more and more accurate. And in commodities in specifics, he suggested that there were three areas where it was operating: pattern analysis, natural language processing, text analysis, summarizing, and also in some very specific areas, the one which he picked out, which I guess we might discuss, was analyzing the weather patterns, the complexities of weather patterns. So I'm just keen to start off by asking each of the panelists just to give their sort of state of play, either adding to or building on some of the things that Seb said there. And I just want to encourage you all in the room and online to submit questions. If you use the FT Live app, or if you're online, the box on your screen, and send me questions as soon as they occur to you, I will weave them into the conversation as they pop up on the iPad here. So, straight in then, Raphael, what do you see? How is Vitol using AI?
I would say Vitol's journey in AI started nearly 10 years ago, especially if we talk about AI in its broader sense, as you've described it here. We started in the beginning with a focus on predicting supply and demand, using more traditional time series forecasting techniques. And over the years, as we gained confidence, we started expanding the use of AI to additional domains. I'll name a few. One is detecting unusual market events, leveraging news feeds and market sentiment or computer vision. Another one would be optimizing our large portfolio of logistical assets, be it storages or vessels, and which vessels to use for which voyage, for example. And more recently, with the big hype around LLMs and Gen AI and the rapid expansion and improvement of those models, we've started to build powerful bots that are being used increasingly by people inside the company to access proprietary data and internal tools. And one impressive number to illustrate that is, in less than 2 years, we've gone from roughly 5% to nearly 50% of all Vitol employees, including traders, using internally developed AI-powered tools on a nearly daily basis.
Thank you. Suleima, to you, where does AI fit into what you're doing and what Comgo's doing?
So it's a bit more recent because 10 years ago we weren't there. Right. But it's a different perspective, right? We are a software provider. So as a software provider, we manage the data of our clients, right? So the added value we can bring to our clients by incorporating AI in the way they use the platforms and the business application is our key driver, right? And what our clients are looking for, would it be banks, would it be traders or large corporations, is obviously additional security, more efficiency, and the ability to access to liquidity faster. So we are implementing this AI to speed up the efficiency of the way trade finance is executed, for example, or access to liquidity through the digital agent in our borrowing base offering. But I can speak a bit more about it later.
And you're using AI, as Vitol is, to interrogate the proprietary data that you have as well?
So it's our clients' data, it's not our data, right? So we have to be extremely cautious around that, right? We are extremely restricted from AI Act compliance, right?
Yes.
And GDPR and all the regulations, you name them. But we can use the data in a certain frame that we have implemented and provide additional value to our clients through faster processing of any kind of document, for example, matching that the content of the document with the legal frames in which the client operates. So it can be compliance, it can be contracts, it can be whatever you want when you extract the data. Same with reportings. So it really depends on the flow and the type of financing the client needs.
Right. I'm going to dot around now a bit. Felipe, I'll come to you next. What do you see from Sparta's point of view?
So when you think about AI, you first need to think about data, because ultimately the AI is using historical data to then come up with either forecasting or to predict either language or trends or patterns, etc. So the biggest issue that we saw in commodity trading, or particularly in oil, which is where I come from, is that we didn't really have a lot of historical data when it came when you're talking about leading indicators or the main drivers that lead to price movements, and because everything was run on spreadsheets. So the first thing we did is we automated all of this process in order to generate the data. Now we have 4 or 5 years of history of these leading indicators, and we are now finally getting to the point where we can actually look at pattern recognition and see when this trend happens or this arbitrage happens. This is the sort of systematic trading opportunity you can now play in the market. So those are some of the things that we're offering. It's more machine learning. Mm-hmm. And on the other side, we're working, of course, with Gen AI for assisting, we're a software company at the end of the day, so how can I figure out where the data is? How can I use it to the best extent, and in moving from human-driven customer success to a much more AI-assisted, you have a database, tell me more about it, how can I communicate with it? So these are the kind of things we're working on.
Right, and I mean, have you discovered that there are issues with the pattern recognition? I mean, Seb Barak talked about, obviously, some patterns are misleading to AI in the sense that it might be something that doesn't represent a pattern. He cited blockage in the Red Sea, for example, not necessarily something that an AI would have picked up from interrogating historic data.
Yeah, there's a difference between correlation and causality, I would say. So we are definitely, the database that we generate is very much linked to, so we're looking at refining margins, arbitrage margin, lending margins. Those are historically the way that traders operated. So if they saw this margin, they would buy or sell whatever asset class. So historically, there's always been this link, but it was not systematized. So now we gave this ability by creating all of the data points historically to be able to do that. So there is a direct correlation and causality as well.
Right. Scott, let me turn to you. Where does Kpler, which is obviously in the business of separating signal from the noise, I think I'm quoting your own catch line for that, bit of advertising. Where does Kpler fit in with AI?
Yeah, I think it's very similar to Felipe and Raphael. We have been using machine learning for numerous years, almost since the inception of the company. We do a lot of time series modeling, natural language processing. One of the areas that I think is super cool about what we do is we also do a lot of image analysis from satellite imagery and also drone imagery that helps us look at world inventories and really derive critical signal, I think, as you mentioned, for people to trade upon. When it comes to generative AI, which I think is what most people consider when they think about AI today, LLMs are a big part of what we do at Kpler now. We have ways in which we can look through our proprietary data sets using LLMs to explore them in new and innovative ways. But I think the next big phase around AI will be beyond just the use of these LLMs and actually how we expose our proprietary data, our models, and give these LLMs, or what we like to refer as reasoning engines, much more context in the domain. That's where I think the next phase is kind of going to move towards.
So the LLM is more specialized then in that sense?
So LLMs are essentially models that are trained on huge amounts of data, usually the internet, but they're closed systems. And usually what would happen is you would get some external tool, something that may allow that LLM to reach out to search the internet and bring content in and let it reason over the top of it. What we believe is this is kind of commonly referred to as RAG, as a pattern. But we believe that not just allowing LLMs to reach out to search the web, but actually to reach into your trading models, your proprietary algorithms, your data sets. I think that's what's really going to drive the next wave of change in this space.
Sure. Dario, you come to this from a slightly different perspective, using the models and LLMs and generative AI in research. Mm-hmm. How far can you go now? Are you going to be out of a job here?
No, I don't think so. I think definitely from AI perspective, what we included within our business model is that we obviously can process high frequency data, but also from a research perspective, we don't just focus on intraday data, it's also decades worth of data looking forward. So it's supply dynamics, demand dynamics. And so these things, obviously, we feed data into it, and that's where the AI has been crucial in pulling that data together, organizing it, because the supply and demand is very important for commodities. But I think more importantly is what we started to pay attention to is the sentiment analysis, because with the news recently over the last couple of months, or even last year, we've noticed that sentiment is carrying slightly more importance than fundamentals can. And it's really important to not necessarily maybe price it into the model, but also account for the adjustment that speculative players might have more important than physicals. And so from an AI perspective, what we had the benefit of was certainly either through summary of news article, research literature, helping us basically to free up time not to do backward-looking research, but focus more on forward-looking. And another thing was definitely sentiment analysis, where we can take a news article and understand that actually I don't think it's going to carry as much importance for the market today, because there's other news that are more prevalent, and that's kind of like a big part of research, what we're trying to differentiate what's important today and what's not important.
Right. And I mean, where have you detected that it can't do things? I mean, Seb Barrett talked about the models becoming more, the LLMs becoming more accurate. Are there areas where you've had to say, let's not use it for that? Actually, it might be actively misleading and dangerous.
So I definitely think AI from a sentiment perspective can be a great baseline. So you can certainly use it to understand where the market's perception of a trading signal could be bullish or bearish. But at the end of the day, you have to take ownership of your decisions that you're making on top of AI. And so from that perspective, it is important to take it as a baseline, but human oversight is still very important, especially if you don't have enough data, if the data is not stored maybe accurately, or if you're using very short period of time when you're analyzing, especially with commodities that are not necessarily as more reportable than FX, for example, would be, you can have some biases that can be captured within those models, and it's your job as a research analyst to say, actually, this is not exactly relevant to what I'm trying to say.
Yes. Nick, just finally to you on this first round, the optimization is in your title. I mean, what are you seeing across your clients about how they're using the various tools now available?
Yeah, absolutely, Andrew. I think trying to bring all of it together in terms of bots and patterns and satellites, we have the privilege to work with the super majors, with commodity trading houses, with hedge funds and sovereign wealth funds, and there is a consistent thing, which is the way we interact with technology is changing, and it's changing forever, in the sense that in this third wave of AI, now we're seeing machines that not only can speak in the human language and interact with us in human terms, but we're getting in the sphere where they're able to contextualize, reason, and even adapt. So what we're seeing, and that's very relevant also for optimization, but across, I would say, the life cycle of the trade, is the fact that we're seeing agents now, and by agents I mean independent systems, pieces of software that can excel at a particular task and then interact with other similar forms of technology. And so we're seeing a world where the human agent will need very soon to learn to develop, collaborate, and be accountable for the work that these agents are producing. So that's why you'll be hearing more and more within the space of trading of the agentic architecture and the multiple different agents doing all sorts of things. But if I bring it back to the commodity trading, if you think about it, in trading you move bits of information from one place to another, whether it's CTRM to an email to an ERP, news clippings, signals, and all that. Essentially, we need speed, we need relative real-time and contextualized market intel, and visibility across books, across desks, across the value chain. So if you bring the two together, I think we're entering a new era where I think the trading industry can be reinvented, and it's very exciting.
Right. I mean, I'll bring in a question which has come in already online because obviously Accenture and other consultancies are available, have over the last decade or more made digitization and the digital transformation a big part of the selling point for dealing with clients. And the question is, AI is still a concept for many enterprises. How do you differentiate it from digitalization, which is already part of trading functions even before AI? So is this just an extension? Does it challenge some of the same things that are being that you had to work through when you were digitizing commodities houses?
I like the question because I think it was in the Financial Times where I read recently that we call AI everything we haven't achieved yet, and once we build it, it's just software.
Right.
But the truth is, we are entering this third wave where I was saying that our interaction with technology is saying. However, if you need to draw a line between what digital and what comes into the AI space, the way we see these large transformations in terms of AI at scale, one of the key things we're saying is fix your digital core. And by that we mean everything from the data and the foundations and your architecture and the large applications that are kind of a license to operate within each trading house, whether it's your ETRM, your ERP, your credit tool, and so on and so forth, versus the bespoke pieces of software that we put together that are quite powerful at particular tasks, the agents I was mentioning. And I mean, if you take a step back and think about what we're actually building and seeing and hearing from colleagues implement, for 2.5 million years, we've been used to being the smartest people around. Now, by many, if not most measures of intelligence, we're not. Whether that's speed, whether that's breadth and depth of knowledge, whether that's pattern recognition, computation, you name it. So I think where I draw the line is, I think the whole digital transformation is very key in terms of making sure that everything you have, first of all, is digital. If you think of the different types of trading, I see very exotic applications in power and gas, but once you're thinking of an agri-trader and you go out on the field, everything is still pen and paper. Right? So I think there's that reality check as well, and you really need to make relevant your proposition to the type of commodity and also the type of players. I think Sebastian was saying that yesterday quite eloquently when he was comparing his side of the business to a super major that has more knowledge and data points from a part of the market whilst they're trying to look at the wider market. So I think it matters to look at each individual player and contextualize and each individual commodity, but digital core is key for everyone.
Yes. I mean, Raphael, let me come back to you and build on this a little bit. The fact is that however good a game everybody talks about AI, everybody knows that somewhere in the system is a part that hasn't been digitized or that has been digitized poorly, or where the data, as Dario was suggesting, is not quite of high enough quality to be able to be useful in the machine. I mean, I guess, can you tell us where you think there are still gaps, either at Vitol or what you see in the market, where it falls behind, and possibly where it still has to be done in a pretty analog way?
I think that's correct. I would say AI or machine learning models are the more visible part of the work, and that's the one that gets most of the attention. But in reality, for 10% of AI work, there is 90% of work under the hood that is either on the infrastructure, let's say building a scalable, model-agnostic infrastructure that makes deployment of new model as seamless as possible, as well as unifying the data, like creating a proper data refinery that has all of the data unified. By unified, I mean having common reference data. It can be locations, it can be product, it can be counterparties, anything has to use the same reference data to unify those different data sets. Otherwise, AI can't do its work. You need to put on top monitorings to make sure that data is kept fresh and that it's accurate. And there needs to be a powerful access layer on top to make sure that humans and machines can access that data as real time as possible. So we see it at Vitol for probably there is 10x the resources put in AI that are put in the enablers underneath. And that also requires a mindset shift in our organizations. I think we often talk about risk appetite in the context of market risk or counterparty risk, but when you start investing in technologies like AI that are more research-oriented than more traditional software engineering, the end game is a moving target. And so as an organization, you need to be a lot more willing to put resources into something that you'll need to iterate for quite some time before you see tangible results. Whereas before, we were more used to only committing resources if there was a, let's say, near-time benefit.
Right, Salemi, you want to come in on this?
Just to add to your points, there's a lot of digital fatigue in the industry and amongst our clients because of what you were saying, because of the resources you need to put in to have a clean database, to have a good referential, to have everything you guys were mentioning. And the good news with AI is that it's re-energizing everybody because you get to results faster. If you have a good methodology of adopting it, it really shows an impact. So it's more budget allocation, it's more energy that is going back into the digitization of the industry that really needs it because we're still far from great standards for most of the companies.
Scott?
Yeah, I think I'll build on that again. I think the problem that the software engineering world has is we're full of rhetoric and often broken promises. I think we have these almost boom and bust periods where technology comes to the fore, we make massive promises and we don't deliver on them. And we've seen this with the cloud, we've seen it with blockchain, we've now seen it with AI. And I think there has to be a notion of sort of realization. So I do agree that there is a fatigue there. The analogy that I always like to try and use is around the game of chess. So there's LLMs out there, ChatGPT, Grok, you name it. None of them can play chess very well above a very simple child. So, but yet there's models out there that have been beating humans for multiple decades. The real key is going to be how we take these generalized reasoning models, ChatGPT, Grok, you name it, and how we then give them access to these really specialized tools that we've all been using. That is going to be what drives this. They look smarter than they are because they can exhibit human behavior, but they recognize patterns and they can replay those patterns back to us. And we then put humanity on top of it that makes it seem so much smarter than maybe it actually is at the moment.
What I want to ask here a bit is where is the edge any longer in this sector? Because obviously everybody is applying AI. There is obviously an edge with proprietary data, but I mean, Felipe, let me come to you on this. I mean, is there something that marks out the likely winners in this area of AI as applied to your business? Or is everybody being elevated to a step where they'll actually be competing just as they were pre-AI, if you like?
Well, it's a combination of both. I mean, you're definitely now getting with the different software companies that are here, or even the internal tools that, for example, you have developed at Vitol, there's this elevation of the game. That's the basics of it, but that's just normal. I mean, why stay in working only with Excel when you can automate and you can do many more things? No? But I think that in this world where the LLMs are commoditized, the key differentiator will be access to proprietary data, and data that can differentiate you from someone else. Because that data will, by having access to that insight that no one else can have, you're going back to let's say the 90s or the early 2000s, where some of the trading houses were looking for data asymmetry, where they had information and no one else had it. Now, how do you get to that point again in the age where the data is openly accessible is by tailor-making it based on what you see in the market. And so you need to not only store the data in the right way and all the work that you said that has to be done under the hood, but you need to have that customization that comes from the traders themselves, that participation from the trader that wants to store this data so that they can then come up with their own models based on their proprietary information. Now that's, it's a combination of both, as I said. We here will provide a certain amount of data that will elevate the level, but then the traders themselves can then customize that to make it their own. And I think it's going to be paramount to be able to go back to this data asymmetry and that competitive advantage.
Right. Nick, did you want to come in on this?
No, I completely agree on the data side of things. In fact, one of the first times I started pondering this type of question was when a colleague of mine years ago started playing with these technologies and built a trading bot, used Accenture stock prices data as the guinea pig, and in fact, he managed to beat the human investor by an order of magnitude. And I was like, here, get my money, get my wife's money, get everyone's money. But once you take a step back and start thinking about it, the question is valid. What will give you an edge when everybody's kind of playing with the same level of technology? And the way I say it, we actually run the data. We are looking at all the digital and AI cases across our Accenture clients. It's close to 450 cases. And what we found out was that the what is pretty consistent. Everybody wants to give more intelligence to the front office. Everybody wants more transparency and control in the middle office. And everybody is striving for automation when it comes to the back office. But what differs is how people go about it. Data is a key one. How many times we've seen that our data is a mess or we get stuck on the data. But there's also other elements, and there's two I'd like to bring here, which is one is, in this new wave, you got to lead by value. If you look at the long menu of use cases and what everybody's doing in the industry and trying to guess what your business needs, you're not going to go far. The people that we see getting an edge are the people who truly rethink the end-to-end, from front to middle to back office. Whatever you do in the front office has an implication on the risk side of things, on the execution, the logistics, the back office. And the other thing that we see as coming up very key is how do I run this responsibly? And what's the responsible AI? You brought up the chess example. I'll bring up Go, and that's almost a decade ago. But when AlphaGo beat the human champion, Lee, in game 4, Lee made a move that was really 1 in 10,000. Now, it was outside the parameters of how this model had been built back then. And the machine lost it. Truly, the engineers behind this couldn't explain why the model made that decision. So apply that to trading. I was just last week with the leadership team of one of the super majors talking about AI in scale, and somebody brought a very practical, real problem, which is we get all this noise from our auditors just for basic automation. How are we going to explain ourselves when we start toying with, some of these machine learning techniques and help them influence our decision making? And I think that's a valid point, and that's why.
You mean they would have to justify to their human
and it
auditors
is
why the machine said something?
It's impossible. You train these models, you know how you train them, but then how they go about making their own decisions, you can statistically explain, but it's very hard to interpret why the machine chose A over B over C. And that creates a...
But I think this is where regulation might actually have to evolve as well.
Exactly.
Now you see the thought process of these machines, they can expose it to you, you can start to see why they're making the decisions they are. But regulation obviously takes a lot more time to evolve and adapt to these changes.
True, and it's a conundrum because regulation will come with these horizontal measures, and yet you cannot even fully go in the details of explaining how the model actually made its decision. So all in all, just to bring it back home, I think running it responsibly and planting the seeds now is also one of the key things that...
Felipe wanted to come in, and then I'll come to Rafa.
I just wanted to add, again, this AI is going to assist, if you want. It's going to assist you. You're pointing out the fact that, if you come from a left field kind of situation, you will be able to beat. Why? Because we're bringing the imagination. The human being will always be driving the innovation. But coming back to your question about how do you win, if you want. And one important element is not necessarily AI-driven, but that's more management-wise, or, we work in a software companies. How do we make people use it?
Yes.
Because you can have it, and we've seen this with all of us have created here LLMs, internal LLMs with our data, and then people say, well, this is amazing, and then they don't use it. So you need to have a very deep understanding of the workflow and understand what pain points that people have across that workflow so that you actually solve a problem. And you're not just the cool guy that comes with something amazing, a nice toy that no one uses. You actually need to solve the problem and look for the pain points,
yes.
which is not necessarily AI related, but it's basically across any kind of technology.
Raphael, I'll come to you, and then maybe Darius got something.
Yeah, I was about to say something similar, that in addition to AI models, which, as you say, get a bit more commoditized, there is all of the systems around it, but also the processes, and building a strong partnership between the traders, the commercial teams, and the technology group is really key. And exactly as you said, you can have a very, very precise model that is proven to be highly accurate if it's just producing a number without proper explanations, if it's just one number but not, let's say, a distribution of results with clear explanations on what are the inputs that are driving this distribution of outcome. You're not going to build trust in the models among traders, and traders will just say thank you, but they won't really use it. So I think what will differentiate the trading companies, in addition to building all of this technological ecosystem around the AI models, is really building these strong partnerships with the traders. And one thing that's interesting is 2 years ago, there was a lot of hype around OpenAI and the new models, and probably some of it was a bit exaggerated, but actually it helped to create that partnership, because it created maybe a partially unfounded fear among some commercial teams that there was a really high-speed train passing and we had to catch it right now, otherwise it would be too late. We can see 2 years later that it's not exactly the case. It takes more time and it's more iterative, but still it's made traders more willing to invest in that journey and not just only invest if they see an immediate result.
Yes, Daria, you're research rather than trading, but obviously the research is being used by traders.
Exactly.
Do you find any difficulty either in persuading your fellow analysts to embrace the machine, or getting its insights accepted by those who need to use it?
I was actually going to bounce off the points, but from another perspective, to the
please.
point where I think when you outsource, for example, your model, or you're working with the developers that are not part of your team, communication is so important. Obviously, as I said, certain things can be relevant to the market one day and irrelevant to another. Whilst you can train the model run on the past, if you don't have long enough data, you might not capture systemic changes, regulatory changes, something that the data has not priced in. And that's why I think it's so important as a researcher to have that creative input as part of the model. You can have many variables on top of the pricing itself that can feed into it. And if you suggest the key relevancy factors, saying, for example, today the USD dollar is actually more prevalent than it would be yesterday, that way you can make a model more flexible to the point where you can justify why it's doing certain things, but also the developer on the other side understands what you're trying to achieve, so you can move the goalpost quite flexibly from that perspective, yeah.
Right. I want to just take one of the questions from online, and then I am going to come to the audience in the room shortly. But Suleiman, I think it possibly comes back to something you said earlier about obviously the need to be very cognizant of the privacy of the data that you're using, the fact that it's your client's data and so on. But this question relates to the sort of security question. The questioner asks whether AI's benefits might be compromised by the fact that you have to protect the underlying data from both cyber exposure, presumably, as you said, GDPR, other regulations that are perhaps holding up some of the opportunities that you might have if you were given a freer rein. I just wonder whether there is a caution here that is now going to chill the sector a little.
There's more explanation to give. Obviously, we are in a world where we have to be more cautious security-wise, regardless of what we do. Let's be very clear about that. So we are adding extra layers of security to everything we do, AI or not AI. Because it's new, because it's not mature, we have to answer to much more questions. And because it's still a big buzz and people are not super well educated, they mix up everything. So it takes a lot of time to onboard people on AI flows or flows benefiting from AI technology. I think today the biggest threat is more on the regulatory side. Because if you look at the AI Act, there are some things quite surprising in it that you can even struggle to do today with the existing technology without AI. So I think we have to be extremely cautious about this regulation and how it can prevent AI from being used. Right. Much more than on the security side, which is common to everything we do.
Yes, Nick, I wonder whether is there going to be a sort of bit of a regulatory arbitrage here, that there are going to be some areas, I'm thinking perhaps of the US, which allow a little more free rein in the use of AI and give an edge to companies that are based there?
Plus, we don't know what's going on in China, really. You saw what happened recently, and stock prices go up and down substantially, given the news from that part of the world. I think, yes, it's going to be the conundrum I was mentioning earlier, for sure, in terms of the back and forth regulation on the one hand, trying to catch up, and on the other hand, us trying to figure out how do we govern this thing, essentially, with safety and navigate it, because at some point we risk losing control. And I need to choose my words carefully here, because of course there's tools we use to follow on the code, and there's ways to put boundaries on what we're building. But for sure, I think there's going to be an edge on those that are going to be a bit more relaxed. But you're taking some risk there, for sure. Right. That's point one. Point two, in terms of this getting an edge, is people. We heard all the other dimensions in terms of data and security and all that, but there's also the people side, which is very key. Like, how do you bring the right people in? Now the trading industry is competing, I think, with the Googles of the world and the Metas of the world to get the right folks in and make a compelling proposition. And I'm not trying to judge here, but the youngest generation doesn't stick around that long in their jobs than I did, or my colleagues. So how do you make an attractive and compelling argument for those folks to sit around and help you build the next generation of tools? I think these are the 2 points here.
Yes. So I want to come back before we close to ask each of you what the sort of trader of the future will look like, as we maybe do a bit of future gazing, crystal ball gazing with 5 years on. So have a think about that. But we've got just over 10 minutes, and I'd like to take some questions from the floor if I can. We've got one at the front here. Might take a little cluster. Microphone is on its way to you.
Thank you. Jeff Lambert, Commodities. I'm wondering, in a polarized world as we are now entering, is there a concern for you as users to have using an AI which is developed by a single country, or now 2 countries, if I'm including DeepSeek in China? Is it a concern as much it would be the cloud support that you're getting, which is coming from a few very selected companies?
Yes,
thank you.
Thank you. Was there another question? I can take a cluster here. Let's see. Well, let's take that one, and then hopefully we'll get some more questions as we move along. So I guess this is a resiliency question to some degree. Should one be over-dependent on a single model or a single country's model? Who would like to pick that up? Perhaps Scott.
So I think when it comes to hosting of models, you have to be very careful, because you can only rely on the terms and conditions of using that model to trust what's happening to your data when you feed it to the model itself. When it comes to self-hosting, which is becoming more and more of an option, I don't see why there's any reason not to use models developed from multiple countries, because essentially it will be under your complete control. And one of the things that I think has been really important in the drive to all of this is, in my industry, focusing solely on software engineering, the open source community have been feeding so much data into these models. We've seen some of the biggest advances. And only in the last 24 hours, DeepSeek have launched a new version. It's 700 gigabit model that can be self-hosted. So there's no reason why, if you had the infrastructure, you couldn't host that model and start to play with it without any feed of risk. So I think it's like everything we've been through this journey with the cloud, as you mentioned. You just have to take it on a case-by-case basis.
Right.
And we see much more concern about where the data is hosted, because at the end of the day, that's what's important.
Yeah, which actually predates AI, so that could have been an issue whatever model or whatever indeed technology you were using. Yeah, good point. Any other questions for now from the floor? We've got plenty we can talk about up here, but I don't see any hands up. Well, let's talk a bit about the energy trader of the future, because Sebastian mentioned in his discussion yesterday that he thought that in the last 5 years everything had moved on. I think he said that it's now the case that a number of people who have an AI background is completely different to what it would have been 5 years ago in this industry. And he posed the question of, what's it going to be like in 5 years' time? So, or perhaps I'll come back down the sofa this way. I mean, Felipe, any thoughts about the energy trader of the future? I mean, I'm hearing a good shout out for humans here, which is good news for us humans.
For sure.
So,
look,
humans and machines working
I think that this is just going to be an additional way of trading. It's not going to be like a replacement. It's going to be just one more way. And we've already seen this with equities and bonds. So it's essentially you moving from this manual, everything is manual, where I was mentioning before this whole data asymmetry. So you just want to have the raw data, build your own spreadsheets. No one can have access. That's great, very manual. But as long as you can control the data. Problem is that that data got out there and everyone had access to it. So you need to process that data. You know, there's 10 times more information and people call it noise. So you need to process it and you have the assisted way. The assisted way would do some of the tasks and will automate a lot of information, and then that would lead to a sort of co-pilot kind of environment that you can actually trust some tasks to be run by the machine. Then you get to a semi-autonomous situation where you're essentially, the machine, if you want, is looking for opportunities, it is managing the position, and the trader is essentially fine-tuning the model. And again, we see this day in, day out in equities and bonds, and even in gas and power in the US mainly, where you have the data, and you can then just fine-tune the model based on the information you have. Ultimately, one day, perhaps we get to a fully autonomous system where it actually trades and executes and all that. And again, we've seen this already in other areas. So, but does that mean that this is the only future? No, it's just one more type of future.
Sure.
And it allows, you know, trading companies to evolve and have different trading strategies. So I think it's quite exciting to see that. Yeah.
Right. I mean, Daria, in your area, research, what do you see a sort of co-piloted version where you've got the machine becoming more powerful and it's an interpretation mode for the human?
I wouldn't say so. I think at the end of the day, we as researchers have to become more data literate at the end of the day. If you have the ownership of the model, it's very important that you understand how to tweak it, how to control it, how to change the parameters so it fits your personalized views. At the end of the day, you can switch between short-term forecasting to long-term, and those two different analyses capture completely different variables. That could be supply-demand dynamics. This could be a short-term tariff announcement. So you have to be on top of those changes. And again, as I mentioned, if you haven't had data that captures, for example, Trump changing tariffs one day and then going back the next day, you don't have that sort of scenario. So you have to stay on top of it and kind of provide your own personal input. But certainly, data literacy from our perspective, where we also control the model and the flow, is going to be very, very crucial for research on top of the qualitative work that we do.
Right. Scott, what we'll be talking about at the Global Commodities Summit 2030, sitting in a room of highly AI literate commodities people?
So I think we'll see people building models in ways that are easier to expose to LLMs. So there'll be a lot more people building them in code. I think we'll see traders who are harnessing armies of agents to look at the world from many different angles, generating scenarios beyond our wildest dreams. So tens, hundreds, maybe even millions of scenarios, and mining those scenarios for the best options to then choose between. I think that's the realistic way forward in the next 5 years. Could we get to fully autonomous trading agents? Maybe. I'm not quite as bullish on that one in the next 5 years, but maybe in our lifetime.
Right. I'll just pause here and see if there are any other questions in the room. Yes, one over on the right flank here. No, let's wait for the microphone, otherwise our online audience can't hear you. Thank you.
Hi there, Wojciech Grytz from Emerging Trajectories. We build a lot of AI models for wheat traders, dairy traders, and one of the biggest challenges they have is building a data set in the first place. There's very few commodities they're trading that are publicly traded, so historical data is hard to get. I'm curious if any of you have worked to build like data collection strategies, and if so, what does that look like? Do you have any best practices or case studies you can share? Thank you.
Okay, data collection strategies.
Yeah. Well, I mean, a lot of us, I guess, know.
Yes.
But, yes, that's what we were talking about, the work under the hood, if you want. It's not the glamorous part of the job, but it's the absolute necessary part of the job where, I mean, to answer your question, it starts with automation and workflow. So if you understand what is the decision-making process of a trader, and you can automate that process, it generates those data points. So meaning, what is the input, what is the processing machine, and what is the output that you're looking for? Once you have that, the models, if you want, machine learning essentially is, it's essentially giving the input and the output, and then it will come up with a model. So you need to have all of the different data points across the value chain. And it's essentially automation, if you want.
Yes. Sulema, did you want to?
No, I just wanted to add that it's becoming more and more complex to execute that. So I think that those who are managing this properly today are going to accelerate tremendously their competitive advantage, especially in the trading space, where access to data, the ease of access to data to take decisions faster than everybody is so important.
Right.
So the gap is going to widen for sure.
And did you want to take a moment to speculate on what the trader of the future might look like?
I think I totally concur with the multi-agent available for the traders to take faster and better decisions, basically.
Yes. Nick, any thoughts on that futuristic outlook?
Yeah, I think it's going to be part human, part machine. It sounds a bit like the Terminator, but it also is, in the sense that we spoke about lots of agents and the notion of data that the colleagues on the panel mentioned. But if we're going to aggregate just for conceptual purposes, I think you can easily imagine it as the front office having their front office wingman, the middle office having the middle office operator, and the back office having its back office specialist. And you know, when 16 years ago I started working in energy trading, I remember for several commodities, you would hand over the book from Asia to Europe, from Europe to America, and all around the world with traders, operations folks in the room, everybody attending. Now I see a world where somebody says, "Hey, Andrew, good morning, and I know you. I went through your charts. It's a bit inappropriate, but I did, and I know you were thinking of entering into that transaction, but I don't know. I'm just making it up. In Kazakhstan, where you don't speak the language, but I do, I read this in the paper that kind of signals a liquidity event, which means that the credit rating would change, which means maybe you should have a credit meeting instead of thinking of a new transaction. And by the way, in 3 hours, you have a meeting for the ADP. So here's what I produced as a first draft for you and the colleagues to review, and let me know what type of scenarios you'd like me to run." And I can keep going with these type of examples, but I think that's a chat we'll be having soon with our agents that are not.
Rafael, final word on the trader of the future?
I agree. I think the main change will be going from being reactive to proactive. Today, we have very powerful bots that can answer specific questions that are being raised by the traders. So, how much are we exporting from country X to country Y? What are the weather forecasts in this particular region? Is it likely to hit this infrastructure? But this is very reactive. I think if we can shift to being more proactive, having bots that can understand trading concepts, understand commodity markets, and can scan continuously all of the data that's out there, detect patterns, and come back to us proactively, as you just said, with trading actions to the traders, then traders can more apply their common sense and potentially additional information they might have that the bots don't have access to, do some sanity checking, and even feedback to the model so that the model over time gets even more smart.
Sure. Great. Well, we're out of time. My prediction is that in 5 years or possibly less, we will have at least one panel which actually has a bot on the panel helping us to discuss these issues. But it hasn't happened yet. I'm very pleased that we've had an excellent human panel to rush through these issues. Please put your hands together to thank them for their input. Thank you. So we're moving on straight away to our next panel. So if you could, if you're leaving, leave quietly. If you're entering, come in silently. And we're going to be delving a little bit further into the oil markets this time, continuing to be obviously a major driver of the commodities landscape. And as we've already heard, massively affected by the current geopolitics. I'll just let you make